Sophie, Paul, thank you so much for inviting us this afternoon to present to you our analysis of Snowman Limited's current financial operations, and as well address the opportunities that are arriving for the future. Snowman Limited has done very well in the past several years, generating a steady amount of income, and its efficient operations, as well as quality customer service, has garnered a name for itself in the city of Calgary. Most recently, an opportunity has come for Snowman Limited. The city of Calgary has decided to externalize its snow removal program, and from there is currently creating a bid auction process. Our recommendation for Snowman Limited is that they should for sure bid in this process because they have significant potential to win the bid and also generate significant amount of revenue and overall net income for the company. From there, we've addressed that Snowman Limited should also implement this recommendation by leasing the trucking equipment. And lastly, we recommend that Snowman Limited use the ITI technology that was suggested by Sophie, and from there, ultimately ensure the success of its operations. So to just go over a quick agenda of our presentation, we will begin with an analysis of both the financial statements as well as the operations of the company. From there, as I mentioned before, we're going to justify why the recommendation is suitable for Snowman Limited and why the financial justification is going to be appropriate, as well as the non-financial justification. From there, we're also going to go into an implementation plan, fully going into exactly what the timeline is and also the risk and mitigations near the end. So the big question for Snowman Limited is this: should Snowman bid in this process for Calgary's snow removal program? There's three things that need to be addressed under this specific issue. The first looks at the profitability of the project. What is the net present value of both the cost and revenue of this project? And from there, is it positive and substantial enough for the company? The second aspect we need to look at is the non-financial aspect of the bid. Lastly, we have to take a look at the potential improvement of also Snowman's current operations. We've taken a look at the financial analysis of the company, and we're very confident to say that there is strong reasoning for the company to move into a bid auction process. We understand and remember that the $35 was the benchmark that was used to justify whether or not Snowman Limited's operations will be lower than its competitors. And our justification shows that whether it's through leasing or through purchases of own trucking equipment, the net cost per residence is going to be no more than $31.66, including the 25% markup that is suggested. Moving forward from there, we've calculated using a net present value analysis of the project and have revealed that by implementing the project, the company will garner at least $19 million worth of additional revenue. And overall, we believe that this would be the most feasible strategy for Snowman moving forward. I'd now like to pass the floor to Laura, who will be going in depth with the analysis of the company.
Thank you. So first we took a look at your financial statements, and looking at them, we saw a couple areas that we think should be fixed before we actually look at your current net income and whether or not the bid is actually feasible. So first, looking at how you recognize your sale of equipment. So with that, it has to come from your actual day-to-day operations, your day-to-day operations of plowing the snow. So it shouldn't actually be included under your normal revenue stream. So it should be later on your financial statements as income from other operations, as well as it shouldn't actually be reported as the proceeds. It has to be reported either at a gain or a loss from what you actually paid for the equipment in the first place. Second, the office renovations that have been completed in the past year. Because this is an abnormal expense and not actually part of your day-to-day operational expenses, it has to be reported separately to ensure that readers of the financial statements know that this is a one-time expense and is not part of what created your revenue. As well as the customer revenue that you have reported in the previous year is from this year, as well as contracts that have been signed for the next year. This revenue hasn't actually been recognized yet and therefore should not be reported on this year's financial statements. That revenue should be pushed towards unearned revenue and moved to your balance sheet and off of your actual your net income statement. With that being said, when you're providing a service, your revenue should actually be over the time period that the service is provided for. So if it's not going to be done until next year, that is when you should start actually recognizing the revenue from that service. As well as the tax right now is under your income. With that, it is a recovery of previous tax paid and therefore should be included actually under a tax recovery account with your income taxes paid on your net income and separated from your actual revenue, as that is misleading the users of your financial statements to thinking that's coming from your actual day-to-day operations, which it hasn't. So with that, we have made changes to your financial statements and brought it down to about $311,000 for the previous year. So although this is less than what you have shown on your current income statement, it's still good, and we still feel that with that amount, going forward and growing in the future with this actual bid process is extremely good for your company and would help with future growth. As well as we looked at the processes right now within your company that could be improved upon. First, right now, you serve your premium customers first, which is a good thing. However, after that, you go on a first-come, first-served basis. So this is an efficient way to actually plan your customers, because routes aren't efficient if you're going from one place to the next across the city. So to ensure efficiency in your company moving forward, you have to look at which route is best for your company to take to ensure that you reduce costs and ensure that you get to customers on a timely fashion, as well as the manual checklist and map that you give out to each driver. So with that, there's a lot of room for human error as they're currently checking off where they go and planning their own route looking at a map. And with that, they could get lost, they could miss a house that is one of your key clients, and it would make a lot of customers unhappy with your services and could cancel their contracts with you. And third, your current drivers are paid on an hourly basis. And with that, there is no incentive for them to complete tasks on a timely manner. So there is a misalignment between what management wants and what the employees will actually do. So with this, they could take the longer route, they could do anything in order for them to build up their hours to ensure that they're being paid more, which isn't what you would want as management. And now to look at what the current processes are and how that relates to what the non-financial needs of this bid are. So customers, we looked at what they've complained about to the city and what they want from the bid moving forward. First, they want timeliness. That is key for them, as right now they feel the city isn't getting to plowing their streets fast enough, and that's a safety hazard for them. As well as they want real-time updates. They want to know when the streets are being plowed, where they can go, and where the best places to go to. As well as they want better complaint results. So they feel their complaints are going nowhere when they complain to the city, and they want to ensure that their issues are dealt with in a timely manner. As well as the city has some ideas that they want as well with the bid. So first, they want community awareness. They want to dispose of snow at a land site, as well as they want annual reporting from your company moving forward on how you were going about this process and whether or not you're actually meeting these non-financial needs of the customers. So we feel that although your processes right now are much more manual and it doesn't allow for all these to be reached right away, with a couple changes that we will later recommend, we feel that it's completely feasible for your company to accept this bid and be able to reach all these needs that the city has set out. So as Tim already mentioned, we did the NPV analysis, and with that we had a bid price of $31.66, which is much less than your competition. So that matched with the fact that you'll be able to reach the non-financial needs, we feel your company will be very successful with the bid going forward. And we based all this on the selection of the truck equipment being leased versus buying it and finding your own gravel site as the dump site. And later on, Kate will actually discuss the benefits of why we feel leasing is a much better option for your company. So we've also looked into the proposed systems of how to increase your actual efficiency with the systems moving forward from your manual system to a more technical system. So there's the ITI system, and with this we feel that the advantage of it is that it has a high reputation, it is much more innovative, as well as ensures a high level of effectiveness within the management operations. It is completely done by GPS and allows for you to maximize the efficiency of your operations. The only disadvantages is it was much more costly, as well as lengthy to implement, and you have to enter into a 5-year contract. However, the other system, the HSL system, there is no contract. It is less costly, and it could still help improve your controls, but the major disadvantages is it doesn't allow for the real-time updates that the other system does. There is still a manual aspect that people have to check off within the system where they have gone and what they've completed. This still leaves a slight area for human error, as well as the updates that customers require will not be as fast as if you chose the first system. So with that, we created a decision analysis of comparing your current one to the actual 2 options that you're faced. So as you can see with the current one, it doesn't help you meet 3 criteria that were set up by the customer that they want from this bid process, which is the efficiency, removing the errors so that there is no customer complaints, as well as the real-time updates that they need. On the other hand, we also looked at the time to implement as well as the cost the best compared to the other system. It is more costly, like I mentioned before, which is the only negative downfall of it. As well as with HSL, we've put it as a neutral for most of the aspects because it doesn't help as much as the other system. When it comes to time to implement, there's a difference of 4 months. So if you were to choose it in December when you receive confirmation of your bid, that 4 months compared to 10 months out doesn't make a huge difference because that would be more towards the summer months when it would actually be implemented, where you have downtime compared to your winter months that are much busier. So with that being said, we feel that the ITI system would be the best to choose. And now I'm going to pass it on to Kate to further discuss our recommendation and the accounting implementation of it.
Thank you, Laura. So in addition to recommending your company to submit a bid, we've also provided recommendations to help you ease our implementation plan in the long run to ensure operations efficiency. So first of all, these are the criteria recommended by the city in the snow removal program. First of all, method for the most effective route is required by the city in order for your company to become a successful bidder in this program. We believe that using the technology that Laura has just mentioned will be able to add value to your consumers, including the residents of the city, and also further allow them to gain real-time access to the information and gain access to the snow removal program on a website basis. And secondly, removing human error, mainly because the system that will be implemented is an automated system, and that means that all the information provided by the operators of the truck will be sent directly from the system to an online website that we hope your company will implement. And this will ensure that your staff will be able to maximize the system efficiency and also allow your management to control the staff much more effectively. Third of all, employees also lack motivation for speed, as Laura has mentioned, and this can be done through a balance game between the speed accuracy and an hourly basis, where your company now will be relying on a per residence basis, so then your workers can now be paid using a standard rate rather than an hourly rate. So how to further meet the city's requirements are something that your company should consider when proposing the bid. First of all, timeliness is something that the city purposely emphasizes, and we believe that this can be achieved through the new systems to ensure efficiency. As we've mentioned, the technology system will be able to help your company better manage the staff and also better manage the snow removal program in the long run. Secondly, it also provides real-time updates and promote community awareness, which the city also strongly emphasizes on. And therefore, we suggest your company to establish a website so that the users of the snow removal program will gain real-time access to this information and see exactly which streets have already been, the snow of that street has already been removed, and therefore reduce the number of complaints, which is our next point. And also allow a feedback system for consumers and users to actually provide to the management team. Lastly, the disposal of snow is also one of the key criteria recommended by the city. And we believe that using the leasing facility that your company will be, that we recommend, your company will be able to maximize profits in the long run as well. And some other benefits in terms of leasing the equipment, other than financial benefits, there are actually other non-financial benefits that will arise through the leasing of the new equipment. The leasing of the equipment, first of all, can be recognized as a capital gain, capital lease, because the economic lifetime of the asset itself is actually around 8 years recommended by the city. However, the average lease term is 6 years, and therefore it's greater than 75%, following by 75% of the economic lifetime, and therefore by following the accounting standards for private enterprises, you'll actually recognize this as a capital lease, and which means that you will recognize this lease as an obligation on your balance sheet and reduce the net effect on your income statement as compared to recognizing on your income statement as an operating lease. Secondly, it is also through a third-party lessor, meaning that your company will actually not bear the full risk and rewards resulting from this lease. And we believe that this will help your company to save some costs in terms of maintenance and also storage costs. And there's also no guarantee residual value required by your company to fulfill this requirement as well. And third of all, you'll also be able to gain networks with these external suppliers. So by partnering with other suppliers, you might be able to, in the long run, maintain long-term relationships with these suppliers and in turn gain some long-term benefits through further negotiations we see that there are 4 key issues. So first of all, in recognizing revenue, revenue should be recognized over the winter season and not when the contract is signed. So revenue should be recognized over the lease term as well as the contract term. And also the 400,000 grant that you will receive from the government, we believe that this would be a liability following the accounting principles, and actually will be fully recognized until it is used. And therefore, when the probability of it being used is actually less, then we will include a note in the financial statements telling the users about this grant. Third of all, there's also the new system that you should be considering. The initial cost should be capitalized on the balance sheet as an asset and amortized over 5 years because it is an asset to your company. However, the annual maintenance cost should be expensed on your income statement annually. And finally, the accounting for leases, as we've mentioned, should be capitalized and amortized over 6 years because it is a capital lease, and a separate portion for maintenance as well as other portions such as snow storage should be separated on your financial statements. And we have also prepared an implementation and timeline for your company to consider. So we're breaking it down according to 1 month to 3 months within the first year as well as the second year. So the immediate action that your company should take is, first of all, to submit the bid by October 15th, which is coming up very shortly in about 2 weeks, and that should be done immediately. And follow in between the months of you submitting the bid as well as getting the results of the bid, we recommend you to actually work with the city to secure a contract for the snow removal tracking system, because the new system won't be implemented until 10 months later. And when you're actually getting the bid results, we are very confident that this will go through. We believe that the leasing of the government equipment and the purchase of the leasing of the government of the pit should also be done at about the 3-month point. And finally, followed by that, you should also hire an accounting team to further track the financials and accounting statements for you to track any changes in your future income statements and balance sheets, and also to hire workers for this program in order to maintain efficiency in the long run. Finally, you should also implement a website in order to provide users with real-time updates, so then to reduce the complaints received by the city. And lastly, just continuing monitoring the program and also implementing your residual tracking system for the months after. And the cost associated with this is rounded to about $1.52 million, so about $1 million dollars, and we believe that this is highly profitable according to your company's profitability in the long run. So here's just the breakdown. And now I'll pass it back to Tim to talk a little bit about the risk mitigations associated with our recommendations.
Okay. So we've looked at some of the implementation and recommendation strategies, and we've identified some risks that we think are going to be important in considering this plan. However, we've also come up with mitigations that we think are going to be appropriate in order to ensure that these risks do not risk or potentially can change the success of the plan. One of the first risks that we see is that there may be an inability to fulfill financial needs. And our suggestion to this is that there should be a maintenance of the relationship with the City of Calgary, and from that moment seek extension for the contracts that would be existent for the snow removal program. From there, the second risk that we see is that there may be a failure to meet the requirements of the government grant. Our mitigation for this is to once again look for alternative funding if Snowman cannot currently use that $400,000 or needs that $400,000 for additional truck purchases. And we believe that given the example shown and the fact that there's a good relationship with banks locally, that this should not be a problem. The last risk that we see is that population growth may not reach 10%, and this would affect the actual profitability of the project. Our mitigation is that there should be a seeking of contracts with other functions and potentially looking for actual increases in the fixed contracts. All in all, we believe that our strategy, implementation, and recommendation will be successful for the company to move forward, gaining an additional marginal income of about $19 million, minimizing all risk minimizing a high amount of risk by leasing the equipment, and from there using the ITI technology. And with that, we'd like to welcome any further questions. Thank you.
The lease versus buying equipment. I was interested in some of your thoughts on the buy option. Because I'm thinking if this has to be out after 2 years, and we're trying into potential lease for 6, that there are some recovery options under the buy. We've got equipment that perhaps we can maybe offload and mitigate some of this risk. What were your thoughts on that? What did you discuss?
Well, first we looked at the 2-year part was only if you could not fulfill the actual needs of the bid. And first we thought that the risk of that was actually very minimal. And beyond that, there's always, with the lease, I'm sure there would be a breaking term with your leasers, or as well as looking at finding a way to actually lease your trucks and equipment to somebody else if it was possible in the contract with them. So to add that to the contract before actually leasing it out.
Can you explain to me a little bit in more detail how for the different price, like what kind of decisions you made and what kind of costs you included in that?
Absolutely. Looking at the grid prices, we've calculated for both looking at specifically the cost for leasing and separately also looking at the cost of actual purchasing. So moving on from here, this is our assumption. We've taken it all this by using conservative approaches, looking at the discount rate that's provided by the external loan, looking at the revenue growth that was suggested, looking at the number of operators and administrators that would need to be hired, and all of that would basically be used to calculate our overall cost per residence. And this is the number that we addressed before, about the $31.66. We've used basically the cost analysis of this and prorated specifically for 1 year, looking at the cost per residence. And we found that although the potential cost per residence is going to be higher by using a leasing method, it is, once again, as we stressed before, a minimizing of risk. And it is still lower than the $35 bid that is used by the external bidders. So this analysis ultimately shows that Snowman Limited is in a great position to move into the bidding process.
I'm a relatively small company. I'm just kind of worried about the initial cost outlay of accepting this bid and deal with that. Because I'm kind of concerned about if you look outside, there's no snow right now, and it hasn't been for several weeks. So this is a contract on a per residence basis. So how do you think you would complete that with the financing issue?
Well, I think we have to understand this from the bank's perspective. Right now, if you get the bid process and you're successful, you're ultimately guaranteed a fixed amount of income, a fixed amount of revenue that is going to be extremely high, and this will ultimately generate sufficient positive cash flows for your company. And this is the perfect opportunity to potentially seek out, as we mentioned before, alternative funding, because the company, despite the fact that it may have less income to actually create these initial cash outlays, it is once again in a good position to reach out to external external financiers because of the fact that you would have a solid fixed income that's going to be generated for the long term.
So one thing that I'm worried about is we've got this great reputation so far, but the Calgarians have been really complaining a lot about their services, and I'm worried that those complaints now are going to come on us, and we're going to have to respond to them. How do you think we can deal with it?
This is actually, our recommendation is actually a perfect opportunity for you to mitigate this, mainly because by implementing the website as we suggested, we'll be able to gather a lot of these complaints from users and actually get feedback from the users of the program, and we'll be able to help the city itself decrease some of the complaints brought up by the residents, and able to actually turn this reputation of the snow removal program around, and in turn help your company to generate a positive reputation that way as well.
So let's follow up on that question. How do you plan to monitor and measure those non-financial areas?
The feedback will be mainly through the website. So by hiring a team of IT individuals, either outsourcing or hiring from within, or developing from within, you'll be able to gather the feedback immediately and be able to gather information that way. And also your operators now will have an automated system implemented in their trucks as well. So in terms of snow removal program and how effective that will be that will tie into the online system, the network system, the technology system as well.
3 seconds. That concludes our